Hello, Warriors. How's everyone doing? Hiya, Brock. Arena, yes, my internet was down on Friday. I'm fine, thank you. Nice to be missed. Alexander, how are you? Didier, Ingmar, Ren, Hugo, all you Mavericks. Okay, let's take a look at some charts. Everyone see Euro up here? Oh, thanks, Didier. All right, so it was on Thursday before my internet went down that I was talking about the dollar to be careful was right here and had a little bit of an overthrow on this wedge. And Friday was a pretty good down day in the dollar. I actually think that there's more left to it. Okay, I think that I'm looking for spots to buy euro, and I'm thinking might be, maybe around this 120 level. It actually looks like there is potential for a right shoulder to develop here. Call this ahead. This breakdown here, we tried the breakdown on Friday and pulled back. So I'm thinking, maybe around the 120 big round number. I was tempted to just have a piece on and buy more lower, but I think I'll wait until tomorrow. But I do think that there's a shot for this to actually carry up towards 121 and a half, 122. I have a lot of confluence with off numbers and moving averages up here around 120, 160. And then I expect the dollar to reassert itself. If you look at the dollar compared to the yen, US dollar yen, you could tell how much stronger the yen is, right? Compared to the dollar. Okay. So I'm the off number this week's down around 90.55. Um, I know some people that think, Elliot, that this completed something right here. Just this bounce, maybe it was just an ABC and they're looking for new lows. I actually, I'm in the camp that we get a pullback and then we have another rally. This rally was about 240 pips. So if we get 1.618 from say here, this 90.30 level, that would take you up to this 94 level, which is very important. Okay. And US dollar yen could be a scalp on the short side. I expect it to hold this previous high. I don't know if it'll get as deep as 104, but I'd be looking to buy this possibly around this. What was I looking at? Yeah, 104.40 or so. But I think we could have one more high in the end. See this? Confirmed, diverging. And now if we get a new high over Friday's high, it's not that far away. 105.67 was the high here. Was this the high? 105.76. Okay, so another 20, 30 pips up here. We'll have a non-confirmation on multiple time frames, even the 4, even the 15. So looking for one more shot up in the end, and that may mean continuation of dollar strength. That's history. So cable now looks like the weak sister after Euro Pound cleaned everybody out. This is about where I got out before I went to 40. But I think we're due at least for a bear market rally. So you're the preferred long. It's going to be euro over cable for me, at least this week. And then I want to wrap it with the metals. And it's my view that what's going on here in the metals is, I know some people think this is a bottom, but I look at this on multiple time frames, confirm lows, and think that gold could be a short between here and 1840, 1850, and silver, you know, between halfway back and 61.8 back. I still think that we could have something like this. I know the bulls are thinking or hoping this is it and we're just going to blow to new highs. Um, I think that it'll make hay while the yen comes back down, and maybe we get to 2750 to 850, and then I'd be looking for one more decline. Equality is going to be about $4, so that take it to 24, 23. If you really want to be bearish, if you look at this weekly chart and you call this an irregular B, and we get 1.618 of this, then you're talking about it all the way down here at about $17. So I guess you could tell I'm not. I think what happened in the metals last week is important. And I was looking at possible sales in gold up around this red line, which silver blew through, and gold didn't quite get to it. It missed it by about $5. So still negative the metals, and looking to trade the dollar on the short side. Those are my calls. The next one's yours, 800-899-BEAR. Okay. I don't even have it up there, Didier. Steve covers platinum. Crude oil, I have no idea. It just keeps going like the ever-ready bunny. Even when there was risk off the week before last, it kept going. Look at this. I mean, I can't fade it. That means it's probably a fade, but look at some of these readings. The Mo is just so strong. I mean, look at the reading here in oil. Look at the RSI. You see that? So if someone put a gun in my head and said, would you short crude or the stock indexes, look at the difference between the RSI setup. This is pretty glaring. This is the most glaring divergence we've had in the S&Ps in a long time. Here we are. So would you rather short something where momentum is confirming, or try and short something where you have pretty glaring divergence? So I hope that answers your question. And yet at the same time, Arena, I can't buy it up here. So it's a no trade for me. You're very welcome. Blake, hope you had a good weekend, buddy. What's new?
Hey, Dale. What a boring Super Bowl.
Oh God, yeah. I watched a half.
I mean, I watched the whole thing, but man,
Yeah.
I mean, that was boring.
Dominating.
Yeah, when have we had a
Yeah.
really good Super Bowl? I mean, in the last several years, can you remember?
No, I'm better at remembering everyone's trades and Super Bowls, but no, I can't.
49ers versus Cincinnati Bengals back in, what was it, 80?
Oh my God.
No,
Joe
I mean,
Montana and those guys. That was good.
There's been some
that was a long time ago
since then. I mean, but I'm just saying the last couple of years have been, I hate blowouts. It's but I'm happy for Tom Brady. I mean, he's an old man.
Yeah.
Throwing it down.
Yeah.
Doing good.
And he unbelievable.
It's impressive. Yeah.
And
so anyway,
he had a great attitude. A lot of people hate the guy on top. That's always the winner. I think it was on Jimmy Kimmel, and he's reading all the nasty texts he gets.
Oh, that's so funny. Yeah, we
Did you
actually
see that? Where someone said, and you have for a chin, your chin looks like an ass because he's got that cleft in the middle.
Because he got the big butt chin.
Yeah. he
anyway,
was a good sport.
Yeah, he's I mean, you have to root for him. I mean, it's pretty amazing. And for him to win without Bill Belichick, his coach, that he, I mean, that it's pretty. It's a great accomplishment. But you asked me how my weekend was. Good. We had Super Bowl. We went to our neighbors because our neighbors are in our like pod bubble.
Yeah.
Yeah. So we went over there and they fixed some great food and I think I gained like 8 pounds yesterday and then son had a soccer weekend, so it was just kind of a it was a busy weekend, needless to say. And I'm if you guys got my week ahead video, man, I had a tough week last week, and if you recall from that video, and I mean I'm sitting here like I'm not really too sure what to do other than be able to point out some pretty key levels. Like, one of the things that I was looking at this morning is just the euro dollar. I mean, we have obviously the 120.60 level is key resistance. We might have had a false breakdown. Like Dale was just saying, he wants to sell dollars. Well, that means he wants to be on the long side of the euro. Then keep an eye on the bull flag here. There's an intraday bull flag, and if we break above 20.60, that should be pretty good. That should be a good breakout. But don't make the assumption that it's just going to break out right now, because you look around, the sterling's a little weaker.
Yeah.
The Aussie's still in a channel, the Kiwi's still in a wedge. So you got the dollar, and I'll just point out the dollar just in general. The dollar's, and this is, I talked about this on the week ahead video. We have an inverted head and shoulder pattern still, and this neckline is actually slanted, and so it's it's a complex head and shoulder pattern, and for that reason, and I pointed out that the 38% retracement is right here, right, Dale?
Yeah.
The 38% retracement's right here, and in a bullish trend, or in a trend that is if we're indeed moving higher, if you only have a 38% retracement, that's a shallow retracement. That means a continuation. So yeah. I can't be bearish the dollar index while we're below or above 90.70 right now, because if this is, and I explained this during the week ahead video, if you guys missed it, I just want to explain it again because I think it's really important. If we have a trend that's moving higher, pull back, only a 38% retracement, which we haven't even gotten there yet, then the continuation is probably an AB equals CD, type of move, which will take us
great look.
Yeah, something like that, around the 93 level. So I know the dollar had a pretty aggressive pullback on Friday due to the jobs report, but after the jobs report's over, 12 hours later, no one remembers the job report. No one cares. It just we're resuming our trend now, whatever we were just doing. So it's Friday at the end of the day. You look at a lot of the moves, and it's kind of like the dollar bled into the very end of the day. And, soon as the weekend started, or as soon as Sunday kicked off, we're right back at it. So that's what I'm paying attention to as far as FX goes. Now, you guys probably just saw the news, and, I'm a little bummed out about this. Hold on, let me go over to my mouth. Tesla just announced that they bought 1.5 billion in Bitcoin. So Dale, I don't know if you saw that. That's what created the spike higher in Bitcoin to new highs. That's a pretty big move. Look at Ethereum, right back over to highs, Bitcoin into new highs. They said they're going to accept.
Call me very, very, very skeptical, Blake. Very, very skeptical. We had this
call you skeptical.
Yeah, we've had this conversation at the end of last week, when Dale also had, near the end of last week, when Dale had a guest that was all about cryptocurrencies. I find it quite peculiar that Elon Musk first, pumps Bitcoin and then announces that Tesla is going to be buying it.
Yeah,
I mean, from an
it's gotta
investment standpoint, it makes no sense, right? You first buy, and you then say, "Oh, you know, guess something? We bought it."
Yeah, I mean, it's very illegal. I mean, I don't know, and even if he gets fined by, you know, you know, the SEC or whoever's gonna, you know, think he's doing something, violating some sort of, investment advice and pump and dump little scheme, they're gonna fine him. But who cares? If
I don't think they bought it.
if you're the
Uh,
wealthiest person on the planet, you're just gonna pay your fine and move along, right?
Guys, they announced it today. I'm sure they've been buying before.
Oh God, yeah.
That's the thing, yeah.
Yeah, I mean,
And-
he's been talking about cryptocurrencies on social media for
It-
weeks.
And Dogecoin and all those
in
coins. Yeah.
in general, his Twitter activity is the least to say suspicious, having to do with financial markets.
Yeah, but let me ask you this, Steve. He may be pumping, but what do you think is going to happen?
Nothing. That's a problem.
Yeah, I mean, he's just going to keep pumping and there's no repercussions to it. So price is going to go higher. Price in Bitcoin goes higher. We're going to stabilize higher and then we're going to move higher. And he just keeps lining his pockets. I mean, nothing's going to change. Nothing's going to change. And
Unfortunately, that's my point. I agree 100% with you, Blake. But that shows the problem, basically. You know what I mean? It's that in essence, I mean, I remember the other day, not the other day, it was a few months ago, they dragged a poor guy out of his house. Like they sent a team, they just grabbed him from his house. They pinned on him like 2-3 charges, serious charges, because the thing was, they charged him that with his activity on like chat rooms and whatever, he made a few $1,000 by in essence pumping a stock. Now imagine living in a world that at the same time that somebody can be like dragged in court and get sentenced for making a few grand, which I'm not saying people should do, right? I'm not advocating, for that. And at the same time, you have people that in essence are creating like billions of pump and dump schemes openly on social media and nobody cares.
yeah, well, hey, it is what it is, and we've got to just deal with it. And I know it's like I hear your skepticism, but it's not going to change. And there's obviously a lot of demand on Bitcoin right now, and
Yeah, undoubtedly.
Continue to rally. Anyway, well, hey guys, just a quick overview of what I was looking at, especially with the euro and with the dollar index. Just remember, if you are a Forex Analytics subscriber, I will be on in about exactly an hour from right now. You guys will have your own viewing of the bias chart. We're going to start filling out the bias chart at that point in time. So I'll see you guys there. Remember, you do have to be a member of Forex Analytics to be a member of Forex Analytics. It is really easy. It's only $1 for 10 days for the premium access. We'll actually get access in premium when you're on your trial. Even if you decide to switch back to the light, your light version, it's only $19 a month. With $19 a month, you can listen to all the webinars that we do, including the bias chart that I'll be covering in an hour. So I'll see you guys there. Steve, Stelios, good morning. Hope you guys had a great weekend. I'm going to turn it over to you
Good
so
morning,
you guys
Blake.
can have a few minutes to speak.
Good morning. Thank you, Blake.
Good
Thanks,
luck
guys.
today, buddy.
Thanks. Good luck. Thanks,
Thanks,
Dale.
Blake.
See you guys.
So I read Tesla's net income before taxes was something like 1.2 billion, and then their regulatory credits, EV credits, were 1.5 billion. So basically, they're losing money on every car they're making, which is a nice
Yes.
business model. Anyway,
No,
but
in essence, the exact phrasing is they keep losing money in every car they're making.
yeah. Anyway, it is what it is. People love Tesla and they keep buying. I would never tell anybody to short it. That's for sure, because that's the sure way to get burned. But
Yeah,
it
that's
just
the
makes
last
it
thing you want to do in bubbles, actually.
Yeah, exactly. Anyway, moving away from Tesla, what do we have?
Tesla, by the way, Stelio, has the market capitalization of the
the next 9
10.
car manufacturers, 10,
10
yeah, combined.
10 car manufacturers combined.
And they
Yes.
sell half a percent of the global
Yeah.
car market. Anyway, let's not dwell on them. It's crazy. Okay, what do we have? Italy. Remember, guys, we have Mario Draghi, who's it looks like he's going to be the next prime minister and leading the next government. It's expected that it's going to name a cabinet this week, and there's going to be a vote in parliament, blah blah. So we're going to get another Italian government, which is going to be for I think 2 more years when the next elections are.
Actually,
yeah.
ideally for 2 more years. If we
Ideally,
wanna take-
if they can make it for 2 more years.
because
yeah.
looking at the recent history of Italy, that's literally the ideal scenario.
Absolutely. And what else do we have? We had Christine Lagarde, who was speaking yesterday, and she actually said something really interesting. Talked about a little bit about monetary policies and all that. And she said in the end that I'm going to say this without laughing, okay? That when this crisis is over, they're going to start to slowly unwind the
Of course, yes.
monetary support. Yeah,
exactly as it happened, exactly as Bernanke had explained
said, yes,
to Congress in
13 years
2008.
ago.
Yeah. Of course.
So I would love to see that, but I don't see it.
If there is a market they want to make about it, I'm buying the other side no matter what the odds are offering.
Yes. Meanwhile, inflation or expectations for inflation are rising. If you look at break-evens in the US, they're moving higher. 10-year break-even is 2.2%. And bonds are selling off a little bit, not massively. 10-year US is what, 115 now or something like that. Even the Bund is selling off. I've had the short in the Bund for ages, and it's going nowhere. It's flat. But
let me pull up both the charts actually. Bund Stelio, speaking of which, at a very, very critical, in my opinion, confluence of supports here. It's first of all, looking at the very big picture, it has been trading within this big channel since, what is it, like summer of 2019. But within that, we then developed this ascending channel, which we're now testing as support. At the same time, the 200 daily moving average is there. So a very nice confluence of support, speaking of which. And since you mentioned the treasuries, I've been monitoring this channel here in the treasuries. We're a little bit higher than support, which also more or less confluences with the 61.8 of this last leg higher. So both the benchmark sovereign bonds at or very close to important support. See, I think if we break through there, then we open the door for more downside.
Cool. Yes, I still hold a short in the Bunds, and the good thing is that it's costing nothing, negative yield. So it's costing nothing, and I'm just going to keep that. What else? Oil is a very interesting one. It still keeps going. I was reading that this was the 7th month in a row that production is being increased by OPEC, and
still the market couldn't care less.
Yes, but you know how it is on the way down.
And on the way up.
And on the way up, it's slow to respond, right? So it's
that's why I'm going to reiterate once again, people should now start being careful. Yes. We've reached now the zone I was looking for as the next target once we broke through this flag. And I think now we've clearly entered the zone that is very likely to produce some type of a reaction. Add to that the fact that so far today, it's the 6th consecutive up day. Of course, it's early on the day, but so far. So I think, at least some kind of a reaction lower from here makes sense. Buying here after such a run, I think makes 0 sense. But, everybody's free to do whatever they believe they should.
Yeah, I agree. And I was going to say, I was reading that compliance from the, there's a schedule on how they're going to increase production. Compliance has been 100%. Obviously, on the way up, if you're increasing production, everybody wants to produce more. So they're, Steve is a Greek. Yes, he is. Oil price keeps going up, but these things, production takes some time for everything to come online. We've talked about US shale and all that. So I think we're probably close to some kind of reaction, just like you said. Otherwise,
and also, as we've reiterated multiple times last week, I still find interesting the divergences between crude oil and the well correlated, currency pairs with crude oil.
Yes.
So that's another reason why I would be, cautious here.
Yes.
Here
You look at
is
CAD,
USD
you look at
CAD, which
Norway.
which
Yeah.
isn't at new lows. I mean, it's far away from new lows, and it's definitely showing like quite a different behavior. And here is USD NOK, which admittedly looks heavier than USD CAD, but still, as crude oil has been pushing to new highs every single day last week, USD NOK has not broken the lows yet. So that's something to also take into account. I don't think you should dismiss this type of divergence. Usually, this type of divergences eventually play out.
Yes, and I've been following Norway for years, and it's always the case that when oil moves in Norway and Canada, but more Norway, it tends to overreact massively, and it's been baffling that it hasn't done anything.
Mm-hmm.
That was $15 run or $20, whatever it was in the last few months.
Indeed.
Um,
Although admittedly, Stelio, USD NOK has had for a currency like a massive move lower, right?
yes,
After this parabolic last
yes,
leg higher.
yes, absolutely. Yes, otherwise, data-wise, we have very little. Bank of England's Bailey speaking later today, and Lagarde, I think, again, but not expecting much.
Somebody mentioned, by the way, the possibility. There are two comments that have to do with the DXY specifically. One is mentioning the failed inverted head and shoulders breakout. I wrote about it in the end of week analysis, and I wrote about it that I wrote about that this is not yet a failed inverted head and shoulders formation. Why? Because 91 is the neckline. So in essence, so far what we've done is that we've back tested the neckline as support, and so far, of course it's extremely early, it's holding. Now, you know me very well. You know that my long-term bias, as another comment that has come, is I'm very bearish the dollar. There's no question about it. I think there's only one way the dollar can move in the medium to long term. Of course, at some point in the short term, it's going to squeeze higher just because of one-sided positioning, etc. But you need to be a little bit careful here because, as I said, this is not yet a failed breakout. So we don't yet have confirmation that Friday's admittedly interesting daily candlestick reversal in the DXY, because on Friday we had an outside black candle in the DXY, which is a nice reversal candlestick, right? But as long as we trade above 91, I can't just say like, oh yeah, the rebound is over, that's it. I mean, you should sell it here. It makes sense from a risk reward perspective. I mean, you want to sell it here with a stop loss above the highs, you have an amazing entry point. But from a technical perspective, keep in mind that there's no confirmation yet that we've topped out, right?
Yes, absolutely.
Yeah. So I think the American expression is the jury is still out, having to do with if this was a corrective move that ended on Friday, or if this is an ongoing corrective move which might have more legs before it finishes.
How
So keep that
about,
in mind.
could this have been, Steve, an ABC for
Yes.
A, and then
Yes,
we get
absolutely.
a higher low for B, and then we have another rally?
As I've said multiple times, Dale, and you've heard me say it literally like 200-300 times.
In 4 years, I've only heard it that much.
Just today.
Yeah, we can make a lot of scenarios about corrective moves, but the problem with corrective moves is that they have multiple phases, multiple time, multiple methods with which they can develop, and it's literally impossible in advance to be able to say what type of a corrective move you have in hand. The good thing is that the characteristics of a corrective move are quite clear, so you can say this is some type of a corrective move, but reading early on what is going to be the format, what's going to be the structure of the corrective move is impossible to do.
Okay, I'm going to stop trying.
Yeah.
Like
in any case, so far, the rebound has been completely unimpressive, right?
Yeah, it
Completely
really has.
unimpressive.
I mean, the way the euro went down and
Yeah.
cable barely gave up anything and Aussie was buoyant.
Yeah.
I mean, you didn't make big money being long the dollar.
Yeah,
Man.
and so far somebody can say that this was just another bear flag, and it might as well be. If we break through 91, that to begin with invalidates the inverted head and shoulders scenario, which puts another nail in the coffin of a possible beginning of a like bigger, move higher. And then I think probably like the last nail in the coffin of the possibility of this being something more would be breaking through like this ascending trend line support.
Yeah.
I think we break through that as well. The chances that the DXY is actually headed higher before it produces at least one more leg lower decrease substantially. Now, what is not going to change, even if that's the case, even if this is what happens, what's not going to change is that the move lower in the dollar has been ongoing for quite some time. The sentiment has definitely changed against the dollar. So I will still be of the opinion that yes, we are looking at a long-term downtrend in the dollar that's going to continue, but the risk reward would still not favor being short the dollar after such a move, unless we're talking about shorter term moves. For example, you break through this trend line and you want to be short the dollar for a few days, right? But I wouldn't be selling like the dollar here as a good entry point for a medium term position.
Yep.
You know what I mean?
Okay, our guest is here, Steve. We have Stephen Clapham with us today, and I think you're going to enjoy this. It's Stephen's first time, but he does forensic analysis of individual stocks. So someone that actually looks at the books before he makes, that's how he makes his decisions.
This individual must have a very strong psychology, because if you're really looking at the books and the same time valuations, you either need to be very resilient or go nuts, in my opinion.
Yeah. All right. Well, we'll see. We'll see.
Because value investing is the proper way to go in proper functioning markets, and that's what we really don't have. Anyhow, yes, I'm very interested to hear to listen to this interview. Yes.
Okay. I just made him a panelist. Hello, Stephen.
Hi, Dale. How are you doing? Thank you for having me.
Oh, it's great to have you. I always love having people here for the first time, and I brought up what your work is, and my associate said, boy, you really have to have strong convictions about what you do, because you're probably seeing a lot of things that have really bubbled up that do not make sense when you're just looking at behind the balance sheet as you have up here. Are we correct about that?
Yeah, absolutely. Dale, I've been doing this for a long time, and occasionally, as your colleague said, you do go mad.
Yeah.
I remember in '99, it was just impossible to be an analyst. And in fact, I remember very vividly, I'd gone to Hong Kong at the time I was on the sell side, and I was the global head of transport for the bank. And I'd gone to Hong Kong to participate in a pitch for the IPO of the Hong Kong Metro, the subway system.
Interesting.
And I'd gone into the office in the morning, and I sat in on the morning meeting, and the sales guys were all, man, I can't believe that those guys have given us that research department. They're useless. They've given us a whole bunch of ideas, not a single internet stock. And of course, what the research analysts had done is said, well, look, my stocks are really cheap. You should buy them. And of course, none of the clients, none of the institutional investors had any interest in real
value. Yeah.
And I've been here before.
Does this remind you of that era, Stephen?
Absolutely, Dale. I
In
can remember
magnitude, could it
in-
be even more of a bubble than we had in 99?
Well, I think the issue. So let me
But
give you a story. I remember having an argument with one of my clients who wouldn't buy a company called AB Ports, which owned 13 of the UK's largest ports. So it was a monopoly business. And at the time, the share price was £1.30. And I said to him, I said, you know, this stock is so cheap that I put my mother in it. And he wouldn't have any of it. And of course, the stock got taken out about 7 or 8 years later at just short of £10. So it made, you know, it was an 8-bagger in that period. And it was pretty obvious stock because not only did it have a monopoly and you may know that Britain's an island. So you either fly the stuff in or you shipped it in or you put it through the Eurotunnel. And it had a huge property backing. So when one of its ports closed down, they simply converted the port into residential real estate. So, you know, it was an absolutely fantastic company. But the difference then was that it was very early in the days of the internet. So it was actually hard to distinguish the companies that were going to be successful from the companies that weren't. And, you know, you could have looked at Amazon and you could have looked at Pets.com and the valuations looked equally daft. But of course, today, Amazon has, if you bought Amazon in 1999, you'd have made a lot of money, provided you managed to hold on to it after it fell 90% in the subsequent 3 years. But if you'd held on to it, you'd still be ahead of the game. Whereas today, there's a difference because most of the companies, most of the quoted companies that are out there have been established for some time. I mean, there's a few that are younger and subject to very competitive pressures. You know, so I think, you know, we're in bubble territory for things like Zoom. So Zoom's a classic example to me of the sort of bubble that we had in 99, because Zoom, you know, we're using it now. It's a great product, but you don't need to spend very much money to have access to it. And if you think that they can put the price up, well, you know, there's always Microsoft Teams, which I also have, and which is free with my Microsoft subscription.
Okay.
So I think there are.
Is this your, let me ask you, I'm sorry to interrupt, Stephen. Is this your main slide, just like a topic slide, or do you have some other things you want to show? Otherwise, I could take over the screen. I'm just curious.
Oh, sorry. What, do you want me to share my screen?
It looks like you have shared your screen. I have a little square here that says behind the balance sheet.
No, that's just
showing.
That's simply my name.
Okay.
So that's my company name is behind the balance sheet.
Oh, okay.
That's my
So
company logo.
do you have anything? Okay, so you don't have anything you really want to share on screen. We're mainly going to just talk.
I'd be happy to do a presentation about my book if that would be of interest to your viewers.
Yeah, that would, and maybe you could tie it to you know, a few examples of what's going on today. And it's an interesting book, and a lot of people that I know are mainly technicians, Stephen.
Sure.
You know, so they don't even look at what they're trading if they have a nice pattern to trade, or, you know, we've reached some Fibonacci target, that's it. They never dig deep into the fundamentals behind a company, like, you know, debt ratios, etc. So yeah, tell us about the book, because I'm interested in the book, especially during these times. I bet that with your methodology, you probably have a ton of short sales that when the market turns and the fundamentals begin to reassert themselves, compared to just Mo and central bank liquidity, that there are going to be some great shorts. Do you think that's, you know, we're entering that era?
Yeah, absolutely. I mean, I couldn't agree more. I mean, I think, you know, this is a fantastic stock pickers market right now, because you've got still quite a lot of COVID affected stocks where there's big opportunities. Yeah. Although, you know, I say to people, you've got to be slightly careful, because many people will look at something like Carnival Cruises and the share price is half. and they think, oh, that's great because the share price has got the opportunity to double again. But you got to be careful, and this is where the fundamentals do matter, because Carnival Cruises, the valuation is no different from where it was a year ago, because they've issued so much debt and they've issued additional equity that the share price itself, the share price is halved, but the total valuation of the business is just exactly where it was a year ago. So it looks like it's a bargain, but
with it being diluted.
Because of dilution, because of the negative cash flow. But let me tell you a little bit about the book. Just to explain, my background is I was a sell-side analyst for many years, and then I moved to hedge funds, and I was a partner at one of the Tiger Cubs. And I now have a training business, so I do online courses. So I don't think this will be much interest to your group. But I also have a members site, which we call the club. If you go on my website, behindthebalancesheet.com, you can sign up there. And there's quite a lot of interesting articles. And I post reviews of various things and my thoughts on current markets in there. But the book came out on November the 24th. And I was very fortunate that it went to #1 in investing in the UK and another category, in 2 categories on Amazon in the US. It went to #1 and 2 investing categories. So it's been pretty popular. And,
congratulations.
well, thank you. I mean, it was, I gave the book a $1.99 price and launch day. So I slightly cheated, but you need to get the message out. And the book actually started out as a notebook. It started out as a way for me to record how to invest. So when I had a good idea or when I made a mistake, I wrote it down in a notebook, and then eventually I turned it into a book. And what I've done in the book is it's got 14 chapters, and I just go through what makes a good investment, how do you find ideas, and then I just go through my research process. So, when you found an idea, how do you test it's a good one? And then how do you research it further to understand the industry, to understand the company, understand the quality of the investment? I talk about how do you assess management. And then I go through in some detail the financials and the valuation. And then I go on to, how do you write a note about what you've done? And I think, for people who are investing, I think it's a very good idea, even for private investors, to write down why you've made this investment. Now, even for your colleagues and the people watching who are traders, they may be doing a lot of transactions, but I'll tell you what, if you keep a journal and you write down, why did you buy this? Or why did you sell this? Why did you make this trade? And then you record the results. When you look back afterwards, it's a tremendous asset in understanding the sort of trades you get right and the sort of trades you get wrong. And whether you're a fundamental investor or whether you're a trader, examining your own performance and understanding your own weaknesses is incredibly helpful. And then I just go through, how do you
what was and may still be one of your weaknesses?
Oh, my weakness. I've got loads of them, Dale. I mean, too many to count.
Me too, bro.
You're laughing. But one of the things that I was just doing this morning, so I'm just finishing off the contents from my Analyst Academy course, a 12-month course, which teaches you how to be a better investor. And one of the last modules is about behavioral finance, behavioral investing. And I give a couple of examples. The confirmation bias was something I learned to avoid very early on. So one of my colleagues had invited an analyst from Goldman Sachs in to present to us on one of our holdings. And I said to my colleague, why have you invited the guy from Goldman's in? Because he's a raging bull. And we already own the stock. So we're not going to learn anything new. Why don't we invite in the analyst from Citigroup? Because he's a bear and he's a seller of his stock. And we might learn something that we've missed. Yeah. And my colleague refused to do it because he wanted to feel good about the stock he owned. Right. And we often fall into this trap. We want to feel good about the decisions we've made. We don't want to be right. We prioritize feeling good over making money. And that's a very dangerous habit in the stock market. So
how about this, Stephen? You don't care at first about whether you feel good or bad. You take the position, it's not working, and then you go out and seek out analysis that supports your fallacy or your bad decision, and you look for company that could help you rationalize sitting in something that's not working. Have you seen people do that? Because I've done that.
Yeah, absolutely. It's a very, very popular bias, and
Yeah.
it's fatal because it means you delay the exit. You'd be
Right.
much better off listening to somebody who's short your long and
Yeah.
understand why. And I go even further. Before I put on a position, I'll make sure that I understand the opposite view, because if you don't do that, you're in very dangerous territory. Because if you don't understand why somebody else is short the stock, you stand a chance of really missing a big opportunity. So when I was at the hedge funds, when I first looked at a company, I would always, whether I was buying or selling the shares, I would always print off a few research notes, and I'd always print off a sell note. The sell notes are very rare, as you know, Dale, and whoever's published a sell note has felt strongly enough to publish that note. And that gives you a very good insight into what could go wrong. And the problem in today's market, the problem with GameStop and all these things, we sent out an email last week saying, if you're buying GameStop today, then you're kind of not thinking about what your downside risk is. And your downside risk to the middle of January is 95%. Now, I'm not saying that GameStop was expensive. Well, I actually think it was expensive. But, people entering into trades without thinking what they can lose, that's stupid, because that's very, very dangerous strategy. And that's exactly the sort of thing that we try and teach in the course. So I'm quite excited about this new edition that I'm working on at the moment, the behavioral finance piece, because I think too many investors and too many traders fall into all sorts of traps. I mean, what are your worst traps, Dale? What are the worst mistakes you make?
Being stubborn. I've been stubborn at times on trades earlier in my career, and I would just look at other people's views so I could fade them. But over the years, I've learned that intelligence gathering is very important, and to surround yourself with people that are good, and you rise to that level. And then I'd say something that sticks with me now is having the patience to ride out trades for longer periods of time to longer term targets. I have difficulty in doing that. So, what's your edge?
Well, my edge is that I'm very good at analyzing the numbers. So what I tend to focus on is the stocks where the stock market, for whatever reason, has misunderstood what the company's going to earn a year or two down the road. So my
Are you
best
still
trades,
finding those in this environment?
Well, yeah, actually, I think there's quite a lot of opportunities with COVID. I mean, since we've had the vaccine, many of these positions have spiked quite dramatically.
The reopening trade.
Yeah, and but I think there's still life left in some of these trades. I mean, I'm looking at one annoyingly. So one of my bad habits is scaling in too slowly into position and being too cute. So I was buying this particular stock, and I was trying to finesse it to get it, 10% cheaper.
To be perfect,
and
yeah.
Then of course the vaccine was announced and went up 50%. So I'm still finessing, but I'm finessing 50% higher. It was a bit stupid. But this particular company's got another 60, 70% of upside in my view. And there's lots of opportunities in that area, but you've got to be quite careful. You've got to understand the valuations, because the valuations for many of these companies have moved.
Have you looked at the forensics on Tesla?
I keep getting asked about Tesla. I mean,
Right.
the accounts for Tesla do not stack up. The company's been very aggressive in the way it reports its numbers. Almost every quarter, it changes one aspect of its accounting to make its numbers look better than they are. So, you know, it's exceptionally aggressive, but it's not, you know, that has got nothing to do with the share price today. Eventually it will have, clearly, but the earnings, I mean, I was quite surprised that Bailey Gifford, one of the guys there, said that he felt that Tesla could be producing several million cars a year in not too long, and that they felt that the company had significant further
They lose
upside.
money on every car if you subtract the credits that they get from the government, right?
Well, you know, the idea that Tesla has got some sort of unique advantage in producing electric cars, I think is pretty unlikely. I mean, clearly the valuation is implying that Tesla is going to control global autonomous vehicles. And that is something that is clearly a possibility. But I do remember Elon Musk saying that a Tesla would drive from coast to coast 18 months ago without a driver. And we're still waiting for that, right? So,
All right. Well, I want to ask you something, because a lot of shorts got killed, and smart guys like Jim Chanos, you know. So in this environment, obviously you think there's inflated value of Tesla. I don't know by what kind of metric it is. How do you know, and do you ever short stocks?
well, shorting was a big part of my job when I was at the hedge funds, and
Okay.
I did a lot of shorting. But I'll tell you, you've got to be psychologically suited to shorting. It's a much more difficult thing to do than going long shares, because when you get it wrong, it becomes much more painful. And
Yeah.
obviously, you know,
We saw recent examples of, yeah, how painful it can be.
well, and particularly in this market, you know, a number of my friends in London have stopped shorting individual stocks, particularly in the States, because they just got crucified. They're short, you know, good shorts, but the Robinhood, the team, the Redditors have come in and lifted these stocks to just stupid valuations. And they're even starting to do it in some European companies. And it's just too dangerous at the moment for, you can't fight a tide of money. And that's, you know, a very...
So are we going to go from don't fight the Fed to don't fight Robinhood?
Well, I think we're already
Yeah.
in that, you know?
So, yeah.
I mean, why, you know, at the end of the day...
Reddit, Robinhood, all these social networks that I never would have dreamed, because I believe that you and I are probably contemporaries. I'm not exact ages, but I was taught that the retail guy, the small trader, was usually unsuccessful. They get long when there's euphoria. They liquidate their longs when there's despair, and that you fade them. And now they've turned into a force that can overrun hedge funds that have, are pretty well capitalized. This is a new paradigm, isn't it?
I think it's a very temporary one, if it is. I mean,
good. That's good
we've
news
seen
to me.
We've seen this before. They'll lose all their money, sadly, and but the trick is not to fight them until the tide is turned, right? And
maybe it is a sign of that we're getting closer to at least some type of intermediate term correction in the market with this stuff going on. Do you pay attention to things like new SEC chairmen and what kind of effect they could have? I don't even know who was our previous SEC chairman, but I am aware of Gensler from his work with the CFTC. Do you look at that in your overall view of, macroeconomic analysis, the regulators?
I mean, I actually, interestingly, my business is partly doing online courses for retail investors, but the main business is I train institutional investors.
Right.
And this year, one of my biggest client groups will be regulators. So we're doing central bank, we're doing the regulator of the auditors, we're doing the regulator of the accountants in various countries. And I pay a great deal of attention to regulation, but it's not going to make a difference to the value of the stock market, I don't believe.
Okay.
I mean, yes, you can regulate and make life more difficult for fraudsters. You can make it more complex to, the financial reporting, all the rest of it. But will you really affect people's propensity to buy and sell in the stock market? I'm not sure whether that's true. I'm not that familiar with the previous or the current Fed chairman. So
okay, can we switch gears to another headline maker?
Sure.
Your view on blockchain and Bitcoin, and how I mean, really, the appeal is you don't have to do forensic investigation of Bitcoin because of the so-called secure and limited supply compared to, being able to dilute it. If anything, they have it. It's called halves. Do you have a view on cryptocurrencies as far as their future, or do you think this is another symptom of just too much liquidity slushing around?
Well, I mean, let me make a couple of points on that. I mean, first, clearly, it's a symptom of too much liquidity floating around the system, and that's one of the reasons that they've done so well. But there's no reason necessarily why Bitcoin wouldn't be a perfectly acceptable alternative to gold. And we've seen one of the very influential investors in London, Jonathan Ruffer, who's historically been invested in gold. He's invested in Bitcoin for the first time last year.
A lot of converts.
Which is quite interesting, because if it becomes an institutionally acceptable medium, that creates a very different environment. But my issue is, first of all, okay, so you can invest in Bitcoin, but what about all the other cryptocurrencies? If there's a limited supply of Bitcoin, there's not a limited supply of an infinite number of other cryptocurrencies. So does Bitcoin endure? And I think that crypto is much more likely to become a valued medium if it's issued by a central bank. And the question then is, well, will the central banks actually adopt it? Because if one of the central banks adopted it, then that would be a much more attractive alternative to Bitcoin for almost all market participants.
India's talking about doing that. And I believe India was one of the first, I guess you could call it a democracy, to pull their high denominated notes out of circulation, which, caused a lot of pain in India. So, here we are, Stephen, S&P's making new all-time highs almost every week, almost every day, almost at 4,000 on the S&P. And I know a lot of the Super Bowls have targets of maybe 4,600, 4,900. We're not that far away from longer term targets that they thought was going to take until 2023 or so. What's your most important advice you could give people that are sitting in cash right now and looking at the market?
Well, I mean,
stay in cash. That would be anything's a viable answer. What would you, in fact, let me personalize it. You're flat the market. You have a certain amount of money to work with. What would you do today?
Well, I think I would put a certain amount of it to work in selected stocks, because I think, irrespective of the valuation of the market as a whole, there are still good stocks available. I'm not sure that I would be rushing to buy an S&P index tracker. It's probably got a bit more upside, but there's a reasonable chance. There's all these signs, Dale, of it being a very toppy market, and we're approaching the top. if interest rates stay very, very low, then you could justify the market actually still being quite a bit higher. But what I'm expecting is that as we come out of lockdown, then, and as we get into the final quarter of this year, there's a huge amount of pent up demand everywhere.
Yeah.
And so there'll be, a big economic rush, and that will bring with it inflation. And the supply side has been destroyed in many industries, very badly impacted. And,
Supply chain problems.
well, just, small businesses going bust or having to borrow and being, very undermined. So I think what we'll see is inflation, and inflation will start in the fourth quarter of this year.
Okay.
And I think the authorities are going to find it very difficult to put up interest rates, but they need to do something to combat inflation. And once you start getting inflation, I think that, equities are at least a hedge against inflation. But historically, what we've seen is that when inflation gets above 4%, multiples compress because there's a perception that interest rates will have to rise. Now, this is obviously a very different circumstance because we've never been in a situation in which we've had this much debt. I mean, for some countries, we've got more debt today relative to GDP than coming out of World War II. And I think what we're going to see is a long period of financial repression, which is going to be very bad for all investors.
Okay. So that could bring on a bear market in equities. So does currency come into play? It's my view that the dollar is at the center of the wheel, the fulcrum. At times, a strong dollar is in most nations, beggars thy neighbor, take their currency down so they could grow their export market. Do you have any views or take into consideration the dollar or any other currency?
Yeah, I mean, I'm quite interested in the whole currency situation at the moment because I think it's there's some big opportunities. I mean, obviously, the dollar looks like it's set for a period of weakness.
Yeah.
The euro, I think, is the place to play because the Europeans, the central banks effectively handed over control of local money supply to the individual governments last week. It's a technical thing that hasn't received a huge amount of publicity. And I think that, the pressures in the euro are so strong with incredibly high debt. I mean, France has got debt to GDP of 363%. It's highest ever. It's got debt servicing costs, which are its highest ever.
So this makes you bearish euro or bullish euro?
Yeah, very much so, because I don't think the euro can survive. Okay. I think we're going into a period that is, going to be very different from, what we're accustomed to. We've had nearly 40 years of falling interest rates. Now, that can't continue to happen unless you go to negative 5%.
Well, they're as low as they were during the Civil War here in the U.S. Yeah. It's almost, you're talking about 200 years, so 150 years.
So that creates a very different market backdrop from what we've had historically. And so what worked in the past isn't necessarily going to work in the future. And I think we're going to have to be much more nimble. And I think one of the great fault lines is going to be the euro, because I think the European project to bring the countries much closer together, it's really been put under a lot of pressure by COVID. Because obviously every government's responsibility is to look after its own citizens, and every government's responsibility is to look after its own businesses and instruct its banks to lend. And that's creating a very different picture all across Europe. And
are you in the UK, Stephen? I'm just guessing.
I'm in the UK. We're no longer part of Europe. And of course, we were never part of the European single currency.
Right. Okay. So it really was great talking to you and interesting. and I'd like to have you back. Maybe the environment will be a little different in the spring. And why don't you show your book and show people how they can order it? Is it still $1.99 or did you raise the price?
I'm
'Cause-
afraid we've had to put it. I'm afraid we've had to put it up.
oh, well, then inflation's going to start before the fourth quarter because
Yeah, I'm
Stephen
afraid
raised the cost.
so. Inflation started now.
Okay.
So there's the book. I mean, you can buy it on Amazon, or if you go to my website, behindthebalancesheet.com, there is
Okay.
a load of reviews, and you can read more about it. The book's been very well received. Lots of people have made very flattering remarks about it. And if you're interested in investing, or even if you're a trader, just going through, don't think there are many books that explain how a professional approaches an investment. And this book is that book.
Okay. Well, you survived an interview with me. Makes you my trading warrior brother.
Well,
Like
Dale,
it or not.
it's to have you
Okay.
on. I really enjoyed it, and hopefully we can do it again.
Yeah, I thanks for taking time today to be with us, Stephen, and very interesting. Maybe next time, maybe some examples of some of the things you're looking at and some of the things that you think might have a problem and how you do it. That'd be great. But really appreciate you being here, and always good to meet an author of a well-selling book that's trying to educate people from all the minefields that are out there in the investment landscape. Thank you, Stephen.
Thanks, Dale. Thanks for having me.
All right, so that's a wrap, everyone. That you know how to find Stephen on Twitter. Okay, and order his book. And a little different than, there are things that are as important as an up and a downtrend. So that's a wrap. Remember, don't just count your forensic your forensic analysis of individual equities, count your blessings, and we'll see everyone for Turnaround Tuesday. Adios. Also, get ready to join Blake and the rest of the team for the bias chart. So that's a wrap. Adios.